All right. Weekend's over. Time to get back to work tonight, guys. Tuesday is right around the corner. It's Monday evening. It's April the 5th, 2021. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're tuning in for the first time tonight, it's great to have you with me because my job tonight is to help us find the best trade setups for tomorrow. That's Tuesday's trading session. I got a great video in store for you guys tonight. Charts are all ready, as you can see in the background. Got the E-mini, got the Nasdaq, and of course, we got the gold on our radar for tomorrow. Speaking of tomorrow, got some big news tomorrow. Got some ranges on the charts today, and lots of great, reliable setups we're tracking for tomorrow's trading session. But speaking of tomorrow, here's the big question. How do we trade these ranges? You see those ranges there, right? Gold's in a range, Nasdaq's in a range, and of course the E-mini is in a range out there, right? We're all bullish, right? Everything's bullish overall right now. It's tough to call the E-minis a bear market right now, right? But we're going sideways. So what are the best setups? What are the best ways to capitalize on ranges? And also too, what are some tricks and what are some head fakes and what are some traps to avoid when it comes to trading ranges tomorrow? So I got a great plan of attack for you guys. Lots of ranges. We'll talk about breakouts. We'll talk about fake outs, pullbacks, and reversals, and we'll cover all the details so you're ready to capitalize on Tuesday's trading session. Before we jump in, though, and get this video going, I just want to make sure to remind you to subscribe to our YouTube channel. We publish this video newsletter every evening with our best trade ideas for the following day. I don't want you to miss tomorrow night's video newsletter, so go ahead, make sure you subscribe to our YouTube channel, hit that little bell icon when you do that. That way you get notified when I post my next video tomorrow afternoon. And don't forget, if you guys have any questions for me, you can always drop those questions in the comment section. I would love to answer all your questions. And I really appreciate you guys tuning in every evening. If you enjoyed this video as much as I enjoy making it, do me a big favor, hit that like button, hit that thumbs up button for me here if you guys enjoy this content as much as I enjoy making it for you. So please make sure you subscribe, questions in the comment section, and thumbs up if you guys enjoy the video here tonight. But enough of the intro, though. Time is ticking. We got Tuesday right around the corner. What's going on here? Well, range, right? We got a range on the gold, the range on the Nasdaq, got a range on the S&P. Now, even though all three of these markets are range bound, they're bullish into trading ranges, all three of them have a little bit different nuance, a little bit different strategy with it. The most important thing about ranges is ranges are magnets, right? So we're fading breakouts, we're resisting the temptation to trade higher here. I get a bunch of great setups we're tracking for. I'd love to buy pullbacks right now, buy pullbacks here at key areas of support below the range. And of course, on top of that, right, I have no problem trading breakouts, but there are only a couple breakout patterns that I trust. So we'll talk about those breakout patterns, and of course, talk about how to avoid some of the traps that we fall into when it comes to range-bound markets. Now, before we talk about the specific setups, though, let's just make sure we get on the same page for tomorrow's trading session. As far as news goes, looking at the calendar here this week, don't forget, it is the second week of the month. The second week of the month is not known to be a very busy news week. That does not mean the markets won't be busy this week, but we don't have a lot of major news on the calendar here this week. It's kind of well known as being a little bit of a lull in the news action after that non-farm, that blowout number we saw last Friday. As you can see tomorrow, the big news tomorrow is going to be that JOLTS report at 10 o'clock Eastern time. We get the FOMC minutes on Wednesday afternoon. We got jobs and my boy Powell on Thursday, and of course the PPI number on Friday. So we have a kind of a peppering of news here this week. Tomorrow morning, of course, the big news is going to be at that 10 o'clock top of the hour. And this would make a lot of sense because we have seen really the highest concentration of the best entry setups have been in that 10 o'clock to 11 o'clock hour in our trade room every day. So that JOLTS report, the job openings, layoffs, and transfer survey, always a very, very important news report to watch. And hopefully that will tee us up to some nice setups tomorrow morning in that 10 o'clock to 11 o'clock block in our trade room. And of course, don't forget, we get together every day. We go over the plan tonight, but we trade the stuff together every morning in our trade room. We open up at 8 o'clock Eastern time. You can register as a new member on our website. I'll drop a link for you guys in the description of this YouTube video. But that's the big news here for tomorrow. We'll talk more about the plan as we go later in the week. Get some big news again, the FOMC minutes and the Powell speech in the afternoons. So we'll talk about the best way to trade those afternoon news reports as we get later on in this second week of the month of April. Can't believe we're already through the Easter holiday, through the Good Friday holiday. Hope you guys enjoy the holiday weekend. But now we're back to the action though. S&P's ready. Nasdaq is ready. Of course, gold is ready as well. They're all ranges. They're all bullish, right, into trading ranges. And so when I think of a bull market into a trading range, I think of two basic scenarios. One is I like to find support levels below the range and look to buy support levels, right? So find, for example, a support swing or an expanding triangle. And because we know the overall momentum is bullish, any pullback is likely to be seen as a buying opportunity, especially with the markets being so bullish that we saw today. What happens though is when we see those pullbacks to those support levels, we oftentimes see sellers come in and try to run this thing going lower. So it can be very difficult to pick the bottom of that move. I learned this lesson a long time ago. I don't try to buy the pullback. What I do is I buy the failure once those sellers get caught on the wrong side. So again, a lot of times it'll pull back, it'll try to go higher, but then because of the momentum coming down, it'll carry over and then go back up, right? So I don't try to mess around with kind of picking the bottom on that. I just wait for the bears to get short and then use their stop losses basically as fuel to go back up into that trading range, right? Ranges, of course, they act like magnets. That's my favorite way to trade ranges, and we'll talk about some variations of that basic failure setup tonight in the video. And then as the market goes higher, we got to remember, ranges are magnets. So we oftentimes will see the price, chop around, go up and come right back down into that trading range. So we have to wait for a breakout pattern. There are two basic breakout patterns I like to use. One of them is called a 1, 2, 3 breakout. We basically require the 1, 2 go out of that range, kind of clearing away from that range magnet. Once I have that 1, 2, 3 move, I can find my channel and I can buy the first pullback off the low of that channel. That is one of my favorite setups for a breakout setup. The next one will be what we call a 2-try breakout. It's a very strong move. It's a shallow pullback with a higher high in price, and I like to look for a trap for the entry there. So if I could kind of summarize in a nutshell what I like to look for when I have a bull market into a trading range, my bread and butter is always buying failure patterns, I call them, underneath this trading range. And then from there, I resist the temptation to trade breakouts, because oftentimes breakouts will go up and they'll come right back down into that trading range. So I wait for that 1, 2, 3 move and I'll buy that first pullback, or that one strong move up, shallow pullback, higher high in price, and of course that trap low here. We call those 2-try breakouts. So that's kind of the basic idea of what I'm looking for here right now. One thing we know, again, is that ranges will act like magnets. So look at the S&P here tonight, right? We can easily see the market makes a strong run up one leg into two legs. You could go all the way back to March 31st if you really wanted to go back and kind of geek out on this chart right now. We talked about this morning. If you actually go all the way back to the end of March, one leg, two leg, three leg, four legs, so you could say this market is 4 legs higher right now. It really doesn't matter to me, because we have that trading range, which is basically confirming for us that the buyers, at least for now, seem to have found some sort of happy place to call home right now. It is pretty remarkable how far this market has gone ever since we heard from President Biden here in the U.S. about that stimulus package early in the month of April, right? Middle to late last week. So, long story short, we know this range is a magnet. I'm looking for levels of support below the range, right, to buy those failure patterns. And my biggest challenge here is just staying out of trouble inside the middle of that trading range, right? I don't want to really get into trouble here by trying to force trades inside the range. So, again, if the market gives me a nice pullback here, right, I'd love to see this market pull back here for me. I would love to get some of these bears to foolishly think this market's gone too far and get short on that pullback. Once I've got, again, I don't like to try to pick a bottom on that, because you know what happens, right? You put your stop below that low, it rolls over, it stops you out, and then it goes right up, right in your face, laughing at you as it goes higher here. So I don't mess around with that game anymore. I just simply look to buy into stop losses, right, on that, again, pull back into a failure setup as we go. And then, of course, if we go higher here, there's not a lot overhead to work with, but we do have that 4,100, that next big round number. You could probably also say, right, another leg higher there, but at this point, though, if they can break free of this trading range, that is going to be a pretty good sign. They're trying to get that 4,100 and then possibly 4,112. That seems a little bit crazy right now, but so did 40.65 late last week, right? So crazy is not the way I would worry about it right now. We just got to get some sort of breakout pattern as we go higher. Again, I'm not going to try to trade the breakout, because it may go right up and come right back down. And again, what I will do though is, if I can remove this channel here real quickly, is look for that 1, 2, 3 move going higher. I'm not going to buy that first pullback, but I will gladly buy the first test of the low of this channel, right? That is one of my favorite, again, 1, 2, 3 breakout pattern here into a hidden channel pullback. And then don't forget that second one would be that 2-try breakout where it really jumps, right? And then you can grab that moving average, shallow pullback, higher high in price, and that trap entry is where I want to get in off of. So those are my two favorite, again, breakout patterns as we go here. Another thing you want to kind of keep in mind here, right, as we go. Those patterns are relatively easy here. One more thing you want to keep in mind, obviously, if the market does end up going sideways here, just sit on hands and just wait for either, again, that pullback, that failure, right, into what is oftentimes a pullback combination, going back up into that range, failure setups into pullback combinations as you run, right? Finding areas of support underneath. So the plan stays the same if we do end up going sideways. What I wanted to bring to your attention, though, is we may end up, and I kind of showed you this earlier, if you recall, with this kind of channel on here, right? So we may end up seeing, sometimes you get these big, strong runs higher here, right? They see that strong run up. It chops around. But let's say, for example, right, they run up on strength here now. I can now mark up that high. I can mark up that low. What I'd like to do is use the top of that trading range now. Think of the top of that range as support now. Get down to the low of that channel. This could potentially be what I call a full price action cycle, which would be a failure, right? A failure into a pullback, into a strength move, into a trap off of that low. These are really high percentage setups. If we can get that, again, that strong pop higher, mark that high, mark that low, get underneath the moving average, trap in those bears, right? Buy right into those stop losses. And then number two, oftentimes we can draw a little trend line here, a little trend line there, and we can buy the pullback, right? Look for those traps off those lows. So really a lot of great potential if we can get that move up, back, and get some good setups off the low of that new hidden channel, right? You're thinking seller failure, right? Bullish pullback, strength moves, trap moves. Now, I'm not going to go into all the small details of the exact entry triggers we use in our trade room, but if you want to see how we actually triggered these entries, right? You know what we're looking for here. If you want to see exactly how we use these failures, pullbacks, strength, and trap entries, I cover all of them in my free trading course. I'll put a little link up there for a little pop-up there in the upper right-hand corner. If you're serious about your trading career, if you want to get more consistent results in these markets, I cover my 3-step strategy and all my favorite entry triggers. So, when I say 1, 2, 3 breakout going higher, buy the first pullback off the low of this channel, right? I'm not just blindly buying that first pullback. I'm looking for things like failure patterns into pullback combinations, strength moves, bear traps, right, going higher. And again, I cover those, right, those fine details in that free trading course. I'll put a little pop-up there in the upper right-hand corner. So keep that in mind here if we do see, and keep in mind too, right, it may go up and really blast higher. I can mark up that high, I can mark up that low, and I can do the same thing, right? Failure, pullback combination, buying off of that low. How do we sell this market, right? How do we sell this S&P right now? Very carefully, because in case you haven't been wondering, this market has been difficult to put a lid on over the past couple days, right? Now, I'm the last person that has the right to tell this market when it's gone too far. So, I'll tell you the same thing I tell my clients every day in the trade room. We want to go with momentum. There's very little I can do to predict when the reversal will happen. Yes, I'm at a measured move right now. Yes, it feels like this market has gone about where it wants to go. But I have, for all I know, we'll open up overnight and we'll just keep on chucking right up into that 4,100 area. So I am not in the position, I have no right to tell the market when it's gone too far. So for me, if I want to sell short right now, I have to either get a reversal pattern or I have to get the market to reverse. So one of my favorite reversal patterns, make sure, first of all, we have a strong run higher here. In order for me to even consider getting short right now, I have to take out these highs. And then once we take out those highs, I can start looking for what I call a crown reversal. Now, I'm going to talk a lot more. I'll teach you a bunch of reversal patterns as a client of mine, but the one that's easiest for traders to learn, and we can cover quickly on this video, is to basically anticipate. The buyers have control, right? So we have to give those buyers the benefit of the doubt. And to do that, let them try once, let them try twice, and look for a trap right above that high. Right? I don't want to talk about getting too aggressive because again, we're a bull market. I want to keep you guys out of trouble for tomorrow. But one of the most reliable reversal patterns, first of all, you got to make sure you take it at a turning point, right? So that we have to retest those highs here, and then get the buyers to kind of dig their own grave, right? Get the buyers to try once, try twice. Once those buyers are committed there twice now we know that one big red candle will have every buyer running for the hills, right? Or running for the exits, if you will, right? They'll all want to get out of their positions. And when the buyers get stopped out or the buyers get spooked and they sell their way out, that's when these things can really turn on you from there. So again, not trying to pick the top on this. I'm not a big fan of picking tops and bottoms, but if I can get this high taken out, get the buyers trying once, get the buyers trying twice here, I would love to take a short right off of that high. Again, with the right environment, right? With the right environment. And then oftentimes what will happen is this will go all the way back down to the side here. We run into a level of support now, and now we can tee it back up here now with a failure and going right back up right into that trading range. Or if they run it lower, and they can hold that pullback, this takes me out of the next potential short, right? How do we sell it short if it goes lower? If it goes lower, do I sell it as it goes? No, we definitely don't want to do that, right? Because this is exactly where all the buyers are hoping this market pulls back to. So if we do get the pullback, at what point can I get short on it? As long as they hold that pullback and jump. Right? I call these 1, 2, 3 reversals. As long as I can get that 1, 2 go. Now, remember, guys, it doesn't necessarily matter how strong the pullback is, right? The pullback can be very, very strong here. But if those bears, if they can't hold it and go, it's going to end up trying and slingshot right back up into that trading range. Again, that's why I say find levels of support below the range. Use those failure patterns I talk all about in the free course I mentioned, linked up in the upper right-hand corner there, and use those stop losses as fuel. If those sellers mean business, if they can hold that pullback and actually jump off the moving average, then I've got a bear market now. Right? We can probably assume the bears want to get back to that 40.38 area, right? That prior high from the holiday weekend. But now what do I do? With the market running lower here, I'm going to mark up that low. I'm going to mark up that high. And this is where I've pretty much got my pick of the litter here, how to get short off the high. My goal is once I get that 1, 2, 3 reversal, I want to get back up around the high of that channel. And I'm looking for things like bullish failure patterns into bullish failure patterns, right? Into bearish pullbacks, into strength, into traps. Again, I'm not going to go over all those small details, right? But you know now what I'm looking for. And then inside that free course I mentioned earlier, you'll learn about the specific entry triggers we'll use to sell off the high of that channel. I'll tell you though, there's a nice juicy target down there, right? We had the day began a bit in a range, right? So that will be a magnet too, if these bears can hold on to it, right? So crown reversal, 1, 2, short that, right? That trap back down again, or, right? And it could be that crown reversal into a 1, 2, 3 reversal pattern, right? So again, crown reversal to sell short, 1, 2, right? 1, 2, 3 reversal there into a follow-up trade, right? So some relatively simple ideas there about how to short this market. I just don't want to try to pick a top on a market like this, right? That's going to be a fool's game here. If you've been trying to pick tops in this market, you are probably bankrupt right now because of it. So as I said this morning in the trade room, right? More money is lost by trying to avoid a reversal than there actually is by just simply trading the direction of this trend. So S&P looks pretty good. Now we got a pretty good plan of attack here on the on how to trade breakouts, how to trade pullbacks, right, et cetera, et cetera. Now the Nasdaq. The Nasdaq is it's very similar, but there's some big differences here on the Nasdaq. You know, for example, the Nasdaq has it's definitely a range, right? It's that range going sideways there. It's not as pronounced though as the S&P, right? The S&P is pretty obviously a range. This may be nothing more than a spike in channel, right? Just kind of masquerading right now as a trading range, right? It may end up being a spike in channel. We'll talk about this in more details here in a second. We also have the fact that it doesn't look like, the S&P was pretty clearly 4 legs up and 2 big legs today. It looks like this Nasdaq still has some room to run. Right, so that's one big difference. That's a really big difference to me, right? Still got room to run there on this Nasdaq. Also, too, speaking of room to run, the S&P's at all-time highs right now. The Nasdaq still has a large space overhead here before we start to even think about all-time highs here. So, Nasdaq definitely has a little more headspace, right, overhead, right? The sunroof's a little bit more roomy overhead here on the Nasdaq. We also have, did you notice that weekend gap? It's not very obvious. It's subtle, right? What is a weekend gap, by the way? The weekend gap is actually whenever there's a difference between the closing price on Friday and the opening price on Sunday night, right? The markets technically trade all the way till 5 o'clock on Friday, right? And then, of course, they close for, end of day Friday. They closed on Saturdays. They open back up at 6 o'clock on Sunday. So that weekend gap, which acts like a magnet all week, doesn't seem like it's going to be a magnet right now, but interesting though, if the buyers lose control of this, if the bears can take control, that weekend gap does look very, very enticing for a magnet, right? So weekend gaps are very interesting things because they oftentimes sneak in and become magnets later on in the week. Now again, probably not going to be enough to get me to short this market right now. Again, I would never short this bull market just because there is a weekend gap or just because we reached that measured move overhead. I will get short though if we see the right entry set up. So there are some big clues here, big differences here on this Nasdaq. You'll also notice too, right? We get this channel. And this channel hasn't been tested yet. If I go back to the S&P, real quickly here, real quick. If I go back to the E-mini, you'll notice, right, they already got that channel, right? So if I draw that channel off the highs, off that low, right, they've already come in and bought the low of that channel. We haven't grabbed that channel low yet on the Nasdaq. So again, there's a lot of differences here, which may produce, we may not stay inside this range very long. So the most important thing is kind of the next few hours here. We kind of want to see what happens here. Think of it this way. If we go sideways, right? If we just kind of, cruise going sideways. Let me put this a little bit closer here so we can get our head around this stuff. So if the market trades sideways here, right? If it starts going sideways, it continues going sideways, we have a pretty good plan of attack, right? We want to wait to get down to support areas, wait to get those, right, those seller failures, and we can buy right into stop losses. Nothing has changed there. That's a pretty straightforward plan. Or, right, if we go sideways, this is what you want to keep an eye on. If we go sideways here, we run into that channel, right? Oftentimes that will be the catalyst now for that breakout, right? For that 1, 2, 3 breakout here, right? So that's why I kind of put that range on, or that channel on there, because that channel may end up being the spark plug that runs this thing going higher. Remember, we don't want to buy the breakout though, right? Especially with that triple measured move right there. What I will do though is I'll gladly look for a 1, 2, 3 breakout pattern, right? So if we do end up bouncing, strong move up, that's great, good for the bulls, but you got to hold the pull back and go. Once we get that 1, 2, 3 breakout, now we know this range, which normally acts like a magnet. Now we know two things. We know the buyers are, for whatever reason, they're hunting for more. And we know this range has now kind of lost its magnetic pull. Think of trading ranges just like planet Earth. Right? Elon and SpaceX crew, right? They fly these rockets, and they got to use those rocket boosters to get the space shuttle outside of the Earth's orbit, right? Outside of the Earth's magnetic field, if you will, right? I'm not much of a SpaceX guy myself, but I think we all get the point, right? Big rocket ship, they got to get the force enough to break free of that magnetic pull that is that trading range. So that's what we need to see. We got to get that strong run up. Not that strong, right? But we have to get above the range. Then we have to show the buyers mean business with a strong jump off the moving average. Remember, it's not enough to see a strong move up. We have to hold the pullback and really go. Once I get that 1, 2, 3 break higher here, now I can mark that high. I can mark that low, and this is where the good stuff happens, right? This is a very high percentage trade. Now, most of the time, that will end up being either a bear trap or that will be a seller failure pattern. Once we see one of those two, either a bear trap or a failure pattern, as I call them, and again, you'll learn a lot more of those smaller details in that free course I keep mentioning, right? But that trap or bear trap, that bear trap or that failure pattern oftentimes then turns into bullish pullbacks, right? Into strength moves going higher, right? So as we pull back, it's that failure into pullback, into strength, into trap, right? Or if we really get lucky, there's a little swing back here as we go higher. We can mark up that swing. We can mark up our channel. We can grab a little trap right below the low of that prior swing. Traps are always my favorite, and you'll see lots of examples of those trap setups I use in that free course that I mentioned earlier. If we see a breakout move higher here, right? Remember, we don't trade the breakouts because a lot of times it'll go up and then come right back down again into that trading range, especially if it happens overnight. If we do see a strong breakout, though, the key is you want to see him hold the pullback and make that higher high. That to me confirms the move. Now, what I love about this setup is the strength of that move. The fact that we get a shallow pullback, what it does is it creates a sense of urgency. It creates a sense of FOMO in the market. And so when you see that higher high now, you know that everybody is going to want in on that trap low. And you know me, right? Always bonus points if you can combine the low of a channel on that entry, right? As we go higher. Again, I'm not trying to trade the breakout. I'm waiting for proof. Strong move up, shallow pullback, higher high in price, then hit them right below the low of that prior swing. Great shots here as we go higher. And of course, we know where our levels are overhead. I got 21 3/4. And then of course, we'll see if we can make our way up to those all-time highs here at some point later on this week. It does seem realistic. It does seem possible for the buyers to make that happen. So now we know, again, the simple plan, how to trade the breakouts, how to trade the pullbacks. One more thing you want to keep in mind, obviously, now is if the market's spiking channels, right? So for example, let's say now we make another run higher here. It's not a crazy run higher, right? It's just a modest move higher here. Now what I can do is I can mark up that high I can mark up that low. And again, think about what I said on the S&P, right? Can we use the top of that range kind of as a support level here, right? Get this thing to pull back to that low. Get those bears now to try to get short going back into that trading range. Remember, I'm not going to try to buy the low. I'm not trying to pick the bottom on this. It's a difficult game to pick the bottom, right? Unless you have a real big account and you can scale in, right? Buy some here, buy some here, buy some here. If you have a six-and-a-half figure account there, you can do that. For the rest of us, right, who are building our accounts, like I know many of us are, right, we need to do a little bit better by timing our entries properly. We have to time them properly. So again, wait for those bears to come in, wait for them to get short up below the moving average, and buy into stop losses, right? Buy those pullbacks, get those strength moves, get those trap moves here. Those are easy pickings as we get, failures, pullbacks, strength, traps, right, as we go higher here. So just some food for thought here. If the market does kind of keep grinding higher with a spike in channel. Now, one more thing to keep in mind would be if the market, for example, here, let's say it does something like this, right? Let's say it really gets lazy. You know what I mean? Let's say it, not very exciting. It just kind of gets lazy, right? Lazy channel. This is very much a bull market. And what you want to do is you want to try to get down under that channel. Okay, spiking channels are notorious for these kind of lazy channels. And then you get those deep pullbacks, right? That deep pullback is not a reversal yet, right? What is a reversal? A reversal has to what? Has to hold that pullback and go. Then it is a reversal. Then I can go, okay, 1, 2, 3 reversal, and I can mark that low, mark that high, and I can, of course, get short on the first pullback off the high of that channel, right? Remember, weekend gap down there, right? Trading range down there will be our magnet for our target there. But again, that is more than, right? That is more than we know right now. If all we get is this kind of grinder, right? If it kind of grinds here and goes higher, you know that the minute we get back around the base of that channel, right where the channel runs into that spike higher there, if we can get underneath that area, that is where the buyers are going to come in. Now, again, you get a big account, you can scale into it. For the rest of us who are growing our small accounts, or for the rest of us who simply don't want to take big risks in this market, the easiest path is to wait for those bears to commit, use their stops as fuel, and just ride that momentum all the way back up to retest the highs, right? These will oftentimes be failure into pullback combinations for that run back up. Right? We see a lot of these setups in our trade room, and you'll get a lot more information on those specific entry triggers in that free course that I keep mentioning in the upper right-hand corner. All right, so we're doing pretty good. The most important thing is just don't try to force range breakouts. Wait for the pullbacks, or if we do get some strength, right? Look for those 1, 2, 3 breakouts. Look for that new channel. Right? If it does kind of pop, look for that new channel. Would love to ride this thing as it goes up to 21 3/4 and kind of makes our way up to that all-time high later on this week. Again, I think by now we've talked about how to trade reversals, right? That 1, 2, 3 move down. It doesn't matter how strong the pullback is. All that matters is can they hold that pullback off the moving average, mark the low, right? Mark the high, and we're doing whatever we can to find a way in off the high of that channel. We know where this market wants to go. This thing turns around, it should be pretty quickly back to those ranges from, well, really at the beginning of this week here, as crazy as that sounds here. So Nasdaq looking pretty good. And, about this time here, if you're still watching this video right now, I hope by now you subscribe to our YouTube channel. I hope by now you've hit that thumbs up button for me. If you're watching this video right now, that tells me you are part of that 1% club that is deadly serious about your trading success and hoping to put the time in. Do me a favor, will you? In the comment section below, I'm always trying to make more videos on this YouTube channel. In the comment section, what's the most important thing that stands between you and being a successful trader? If you're still watching this video video right now, you are the person I try to work hard for every day. And I want to know what's most important for you. Is it entries? Is it support and resistance? Is it mindset? Is it trade management? What do you think? Leave me a comment in the comment section for me if you would. I would love to know your opinion because I do value your opinion. You are obviously someone I want to work hard with here because you're still watching this video right now. So really appreciate you guys making sure you subscribe to the channel. And of course, drop me some feedback in the comments section. What's the most important thing I can help cover for you here on this video? Let's wrap things up now with the gold. Now, gold is a very cool looking chart here. Very interesting chart here. Again, not a lot is different, but there's a lot of small differences, right? We have this bull move up into our trading range. That seems pretty obvious. One thing that's not so obvious, though, is the fact that we're going above the range and now potentially coming back below the range. You'll notice I've marked up the move above, I've marked up the move below, and that creates some additional support level there for us, right? It's the bull market into a trading range. The range acts like a magnet, and so I want to buy at support levels, right? Support levels, right? Below the range, right? Buy at those support levels. I want to really be careful not to trade breakouts because, well, as you can see here, breakout fails, breakout fails, breakout fails, at least for now. So I'm trying not to get wrapped up in these breakouts. What is interesting about this chart, though, is you'll notice there's clearly some rotation going on. So whenever we see good rotation like this, we may see this market go up, pull back, and we may get one of these. It's not as bulletproof as if you could buy below the lows here. But you know what I always tell my clients is if it looks like a duck and it acts, or if it looks and it sounds like a duck, it's probably going to act like a duck, right? So if we can get a good entry pattern off that low, I wouldn't mind taking that trade long here right now on the gold. So let's kind of go over all the scenarios here right now. I know that was kind of a long-winded introduction here to the gold right now, but the first one is the pullback, right? The first one's a pullback. Now, if we get a pullback on this, the fact that we're coming from above the range, right? We call this rotation above the highs. If we rotate back down again into these support areas, this is going to be very bearish, right? It's not going to be like the S&P pulling back, right? So again, this is a very small difference, but it's a really big, important difference. Because again, if we do break above the range and then we come all the way back down, now what's going to happen? There's a lot of bears in the market right now. And you know what? They'll be drawing their channels. They'll be looking to get short right off those highs. Now, I am not going to get short off that high here, at least not yet. What I will do, though, is because I'm at an area of support below the range, and also I have all this bearish momentum in the chart, what I'll do is I'll give the sellers a little bit more wiggle room than I normally would give them, and I'll give them 2 attempts. We'll let them try once, we'll let them try twice, and then oftentimes, once you get these bears, right, trying once, trying twice here, again, you know exactly where those stops are. You can buy right into those stops. And then also, too, one of my favorite kind of follow-ups after what I call a nested failure, right? The term nested basically meaning a failure inside of a failure, right? So again, we rotate off the high. I want to buy down here, but I'm a little bit worried about momentum, right? Momentum's really strong as we go lower. So give the bears 2 tries. Once they try twice, you know exactly where their stops are. I can buy off a trend line off of that low. I can buy into the stop losses as it goes higher. There's a lot of different ways you can take that trade. One of my favorite setups is right here, is these nested failures. And then watch, as it runs higher, we can oftentimes draw a new trend line there, a new trend line there, and grab that pullback off the low of that channel. Because as you know, the target at this point is back up to retest those highs. So again, if we get a pullback right now, we get a nested failure. It's the same thing as a regular failure pattern, but again, you don't want to be too aggressive because we're rotating from above the high of that trading range, right? So a nested failure into that, kind of like a 1, 2, 3 reversal, buying that first pullback off the low of that channel. So that would be how I would buy the pullback on this. What I'm also wondering is I wonder if we'll get something like this, where we pull back below the channel, the bears try once, the bears try twice, and we get lucky, right? This would be a really nice entry setup. It's basically a trap low, right? Now, usually I'll take these types of trades when I see a really strong move that won't pull back, right? It's a little more on the aggressive side, but imagine now a trap, right, below a prior swing that allows us now to buy the low, again, of this channel. Again, we've got some pretty good rotation, right? Rotation looks pretty good here. So I wouldn't mind buying that low. But as you can see, though, what happened back here, right? We pull back. The bears try once. The bears try twice. So that works, right? It's that same, right? We pull back. We don't want to get too aggressive on this because we're right inside the range here. Bears try once. Bears try twice. Get that trap low there. That's a great looking setup. So again, if all we get is this pull back, and then we see the bears try once and we go higher again, right? Bears try twice now. Bingo. Get that nice strong signal candle closing above the moving average. That's a great setup. Now, what I would do in a situation like this is I would go half size position a trade like that, right? It's a good enough entry setup. It's a good enough location. It's worthy of a little bit of a position, but it's just, it's definitely not as good as the big move down, right? 1, 2. I'll go full size position on setups like that. Right? Does that make sense? Right? If it does, give me a thumbs up in the video tonight. If it doesn't, make sure you comment in the comment section and let me know. So if I had a shallow pullback, right? Shallow pullback trap. And then as we go higher here, same idea, right? 1, 2, 3 breakout into that hidden channel pullback, right? 1, 2, 3 breakout. Don't buy the first one. Buy the next one, right? Or it's that strong run up, that shallow pullback, that higher high in price, right? I almost should call this a FOMO breakout because that strong move up and that shallow pullback. The shallow pullback is what drives the buyers crazy, right? Because they can't get into it. And so once it does trap low, everybody wants that trap low, and it becomes a very, very reliable setup. And again, kudos to you if you can find a hidden channel there, right, to buy that hidden channel. I also, if we do see this thing hold, for example, and run like this, I would have no problem marking up that high, marking up that low, right? Getting down to the low of that channel and looking for one of those failure into pullback combinations, right, to buy off of that low. And again, I'm not going to go into more detail on the specific entry triggers, but you can definitely find more details in the free trading course linked up as we go. How do I short this market? How do I short this market right now? Well, that's a real strong move higher right there. So in order for me to want to short this market, I would have to get up, take out those highs. Buyers try once, buyers try twice, right? Trap high on this because it's not a bear market, right? It is a very bullish market right now. And in case you were living under a rock the last week, we're printing $3 trillion and more money. So it's tough not to make a case for gold going higher here, right? Unless you're a crypto dude. So we definitely have gold in a position to go higher right now because of this monetary policy. You print more money, it's bad for the dollar, it's good for gold. So just be careful with that short, right? But a crown reversal off the high will be great. Or it's that strong move down, it's that hold the pullback, and it's that jump off the moving average. A strong move down is not enough, right? It's not enough. We have to hold that pullback and go. Then I can mark that low. Then I can mark that high, and I can get short off the high with failures, with bull traps, with strength moves, right? With pullbacks as we come off it. Where do we think the bears want to get to? Where do these bears want to get to? Ideally, you've got that 1,700 round number. That would be an easy magnet for tomorrow. But ideally, they want to get back down to that big low, right? We called that reversal late last week here. They want to get back into that range, right? That range is a nice, tasty target there for those bears there. So that will be where the bears want to get to tomorrow. If they can find a way to take control of this market. But again, unless we can get proof of that 1, 2, 3 go, a deep pullback, I am still looking for 1 try, 2 try, and right back up into that trading range. All right, guys. So really, I'll tell you, a really good plan here for tomorrow. I got a beautiful spot here on gold. Will we get that deep pullback? Will we get a shallow pullback? We're going to find out here in a moment. Will the Nasdaq keep going on its way up to all-time highs? And the S&P, right? Will we get a reversal? We know how to trade it, right? Will we get a 1, 2, 3 move? Only time will tell here right now. Now, don't forget, tomorrow morning, we open the trade room up at 8 o'clock Eastern time. I would love to have you there trading right along with me, 8 o'clock every morning, Monday through Friday. Getting registered, joining up is really easy. I'll put a membership link for you in the description of this YouTube video, or if you're on our blog right now at sidewaysmarkets.com, right below this video tonight will be a big button for you guys to get registered. We get a bunch of really great specials going on right now, so don't be afraid to call the office to learn more about those. We've got live chat on the left, live chat on the right. Drop those questions in the comment section if you got them, and make sure you subscribe to our YouTube channel. And if you really enjoyed the video tonight, if you really enjoy it, do me a big favor and share this video link with some trading friends of yours. That is one easy way to help me grow this YouTube channel. So at that point, guys, we'll wrap things up. Hope you guys enjoyed the video tonight. Hope I'll see you tomorrow morning at the opening bell. And as always, right, be well out there. Be nice to each other. Who you got tonight, by the way? Big game tonight, right? Boy, what a game on Saturday. Oh my goodness, that three-point buzzer beater by the Zags. Oh my goodness. You know, I live in Los Angeles, and so everyone's a UCLA fan. And people were jumping in front of cars after that on Saturday night. Oh my goodness, what a game on Saturday. We may never see a finish that good in the Final Four ever again. Maybe tonight though. We're going to get a big game on tonight. Who you got tonight, right? Baylor, Gonzaga? Who you rooting for? Let me know in the comment section below. But enough of the finish up. Let's get out of here. Enjoy your evening. Enjoy the game. We'll see you tomorrow morning at 8 o'clock in the trade room. And if not, I'll see you guys tomorrow night, same time, same place on our nightly newsletter. As always, be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.